All right, ladies and gentlemen, boys and girls, friends and family, fans from all around the world, how are you doing today? Riveting discussion. We're talking taxes. And we've had a few other phenomenal and really outgoing, just generous people on the show to discuss something that very few people know a lot about. But the man who's joining us today is a tax professional, Jay McFarland. Jay is going to just be answering some generality questions for us. Again, this is not going to pertain to any individual account or person or company, but I'm just going to ask him some questions and see what I can learn, because I consider myself not a tax professional, and I reach out to people like Jay and Trader Tax to just get some more information. So Jay, before we dive into all about the taxes, man, just tell us a little bit about you. How'd you get into this world, and do you actively trade the stock market yourself?
Yeah, I really appreciate it. I appreciate the opportunity to talk about taxes. I kind of got into this through the back door, trading Forex. And like a lot of people, got involved, made a little money, lost a little bit of money, and didn't give any consideration to tax preparation. And at the end of the year, I was shocked to learn that the IRS treats day traders completely different. And I thought I was going to be able to take deductions. I thought I was going to be able to take a certain number of losses, and I was out of luck. And so in researching that, I actually found Trader Tax Pros. I formed a relationship with them. And from there, I said, I want to help people avoid all of these pitfalls. So I dove in head first and joined the organization so that we can help traders avoid all of these potential problems. Because if you know about them, you're not going to get yourself in trouble, and it's a fairly easy path. But if you don't know about them, you can really set yourself up to fail, depending on the type of trading that you do, and if you don't take proactive measures.
I need to learn about these pitfalls, because pitfalls is a plural word. For me, I think the biggest pitfall would be just not taking some money aside, saving it just in case so you can pay some taxes.
Yeah.
Obviously, I'm sure there's more than that. Can you elaborate?
Yeah, so basically, as I said, the IRS looks at you differently. A lot of people, especially those who pay for coaching or for indicators and those types of things, they think that they can operate as kind of a mini sole proprietorship and take deductions against their investments. They also think that they can write off losses just like a normal company would be able to write off losses. What they find out is that the IRS does not look at you as a small business or as a day trading entity. They look at you as an investor. And as an investor, you're taxed under capital gains, and you can only write off losses of up to $3,000 a year. You can carry that loss over year after year, but that's it. So what you want to do is convince the IRS that you're an active day trader instead of an investor. And that is where the journey begins.
I'm about to say we're just stepping over into it, because yes, you're absolutely correct. I mean, if you're just opening up a trading account and clicking buttons and trading, that is entirely different distinction. How do you make that distinction on your taxes, or do you have to do that by creating an actual company like an LLC?
So there's actually two ways to do it. There's the LLC option, and then there's something called the Trader Tax Status option. So the Trader Tax Status option is if you want to remain as an individual, as a sole proprietor, you have to convince the IRS that you are an active day trader. And in order to do that, you have to meet certain guidelines or levels of proof. The problem is that it's completely subjective. The courts are the ones who have arbitrated what the law actually says, and there's no real definition. I can give you some general guidelines. If you want to qualify for trader tax status, you need to be looking at more than 720 trades a year. You need to be trading about 4 hours a day. You need to, and that includes education, so you can be studying and looking at indicators. You don't have to be constantly hitting that trade and sell button. You need to have mostly short-term trades instead of long-term trades. And again, you need to have frequency of trades. So it's not like you can be trading this month, like I traded in January and I took February off and now I'm trading again in March. You have to think about it in terms of proving to them that you're a business. If you do that, then you can take deductions against your profit and your loss. So you can write off your home, your internet, your phone, any coaching education money that you've spent. any subscriptions, those things you can then write off. You're still subject to the limitation on losses unless you take it one step further, and we can talk about that one step. But and to qualify for trader tax status, that's something you do at the end of the tax year. So when you file your taxes, you indicate to the IRS, I want to be seen as a trader and I'm going to put in these deductions. The problem is you don't know in advance if you qualify, so they can reject you. And it's subjective. You can qualify this year and not qualify next year. So it's a difficult path to take. We do have a lot of traders who take that path because they trade so prolifically. They know they're going to qualify every single year.
Right. How do you make that? You said indicate. You have to indicate. How do you do that?
Basically, it's your 1040 form and your Schedule C at the end of the year. You will indicate your type of income from your 1099s, and you will put in the deductions, and then the IRS will look at it and they'll say, yes, we feel that you can take these deductions, or no, we don't. There's not actually a specific trader tax status form, which is a little bit strange if you think about it.
Yeah.
Because how do you do it? Well, you just submit as if you think you're a trader, and if they accept it, great. If they question it, then they'll come back and say, okay, prove to us that you're trading this much. Prove to us that you're a trading organization. So this area of the law it's wacky. It's so subjective, and that's one of the things that makes it so difficult to carry out.
Got it. It's good to know, though. I mean, because again, sometimes for me, I always think to myself, wait a minute, am I missing something? Oh.
Yeah. Now, the other thing I will tell you about is there's confusion out there. There's trader tax status. That allows you to take deductions against your business, and that you can make at the end of the year. There's something else called mark-to-market accounting. Okay, mark-to-market accounting is what takes your status from investor to trader in such a way that your capital gains become ordinary income, which can affect your tax bracket on what you're earning. And you can take unlimited losses in that year, and you're not subject to the wash sale rule. And the wash sale rule is probably the biggest danger zone for any securities trader. That's where they can get themselves into the most danger. If you make the mark-to-market election, then you eliminate the wash sale rule from your life. And we can talk about what the wash sale rule is. The problem with mark-to-market is you have to make that election in the tax return of the prior year. So trader tax status, you can do it at the end of the year. But if you wanted it this year, you would have had to have filed for mark-to-market using Form 3115 on May 17th because of the tax deadline was extended this year.
Yeah. Okay.
Now and just so you know, this is all talking about if you're trading as an individual.
Yep.
It changes if you're trading as an LLC.
Got it. So when you're going through as a trader, does it matter what you're trading, Jay? So for example, this sounds a lot like we're talking about stocks. What if you are primarily as you mentioned, Forex trader or potentially futures or commodities?
Yeah, it actually stays the same. There is one change, and that's with futures. So what we call 1256, right? Which is your let me get the language right here so that I don't confuse anybody. It's section 1256. So futures, options on futures, those are taxed at a different rate. And it's actually a great rate. It's a blended rate. It's a 60-40 rate. So if you're in a 37% tax bracket, they tax 60% at a long term and 40% at a short term. So it can take your tax on that down to like 28%. So if you're trading futures, you're going to want to pay a little bit more attention to the tax law and make sure that your accountant knows that you're a futures trading, because this is where a lot of traders will leave money on the table because their accountants aren't familiar with trading tax laws. And so you could have if you're primarily futures, you could have a much lower tax rate on your income. So that's something to watch out for sure. Everything else is pretty much treated the same.
Yeah, it is. And I would highly suggest for anyone who is watching this interview to make sure to check out in the description box below and at least have a consultation. There's a link there to do that, because anyone who's watching this channel and who's a subscriber probably is very active in the markets. And I'm not saying that whoever you have as a CPA is a bad person, but they might not be entirely up to date on all the trading law, because that might not be their specialty. Is that right, Jay?
Yeah, I have to tell you, one of the hard parts about my job is I spend, especially this last tax season, so many people in the pandemic, because they were sitting at home, got into day trading. And some did very well, I'm shocked. Others did not do very well. And they have an accountant that they count on, right?
Yeah.
And so they asked their accountant about it, and it turns out their accountant didn't know about any of this trader tax status or anything. And then they got themselves into trouble. So now they're calling us, and the damage has been done because they didn't know. And it's not a knock on their CPA. It's just like, if you're a real estate, agent, or you own real estate, you want a CPA who's familiar with real estate laws. Same with agriculture and other types of taxes, because the code changes. You can't have an expectation that one CPA is going to know everything about every tax law. It's just an impossibility with our tax code. So make sure whoever you use, and I'll give you some guidelines, Jeremy. Just ask your accountant if you want to know if they're qualified. Ask them, do they know what trader tax status is? So that's question number one. Question number two, ask them if they're familiar with mark to market. Those two questions right there, if they can't answer those questions, if they say, oh, let me see, let me go check, then you probably need to go searching somewhere else.
Are you allowed to have two CPAs?
Yes. Oh, yeah, absolutely. We have people who have a CPA who does their trading for their LLC or for their trader tax status, and then they own properties, so they have another CPA, right? So yeah, absolutely, you can have more than one CPA.
Yep. And so that was bringing that up for anyone who might be out there. Again, a lot of ways to approach it. It's again one of those educational aspects where there's no negative in having multiple sources of information. Just like multiple streams of income is a good thing, multiple streams of knowledge is a great thing.
Yes,
so
don't
limit yourself.
Absolutely.
Yeah, cool, man. So we mentioned one asset class that I kind of skirted over on purpose, and now we'd like to talk about that right now. Brother, cryptos. Okay, so the last 14 months have been insane for cryptocurrencies.
Yes.
What's your just general overarching, non-specific thoughts on taxes as it relates to cryptocurrency?
So cryptocurrency is treated the same as any other security. It's treated as a stock, right? So you're going to be taxed on that stock when you sell that cryptocurrency. In fact, there's a couple of things that can trigger the tax. So if you sell it for cash, if you trade one currency for another cryptocurrency, if you use crypto to pay for something, that's a taxable event, and that's something that's becoming more and more popular. You used to be able to buy a Tesla, but I guess you can't now. But if you would have purchased that Tesla with crypto, that money is now taxable on that year's tax return. Buying NFTs, which are also, also coming into play, though that is also a taxable event. So what happens is whatever brokerage you're using, if you're using Coinbase or anybody else, a lot of people think that crypto wallets they're not tracked. But if you're using a brokerage like Coinbase or something else, at the end of the year, they file with the IRS. And anybody who's using their services, they send that to the IRS. So the IRS knows basically what you've been doing with crypto. So if Coinbase has said, hey, Jeremy's been trading crypto, and then on your tax return, you fail to put any crypto in there, they're going to know about it. And they're going to come back and they're going to say, hey, we're missing some crypto here. What happened? It's not the end of the world. You can file an amended return. But you want to be aware that it's not as anonymous as people tend to think that virtual currencies are if you're using any type of brokerage services.
Love that. Very concise information. So when we're talking about a lot of other asset classes, essentially real estate is a phenomenal way to own and use depreciation and more or less incur no tax liability at the end of the year if you have enough real estate.
Yeah.
I think the biggest downside of active trading or just liquid securities and liquid assets is the tax implications. What would your opinion be on that?
I think you're right. But again, I think it's a situation where if you do tax planning with day trading is just as important as getting your personal trading algorithm in place. Like if you finally figure out how to get more wins than losses and you can make money, that's only step one. Step two is tax planning, because we talked about the wash sale rule. So if you're trading securities and you're getting in and out of a stock on a regular basis, you may not know that if you sell that security for a loss and then you buy it back again within 30 days, your loss will be disqualified by the IRS as long as you stay in that security. So you could be thinking, well, I sold that for a loss, so I can take that loss against my profit. So if I had a profit of $20,000 and in that sale of that security, I lost $10,000, then my taxable income is only $10,000. Well, the IRS says if that's a wash sale, that loss is disallowed for the time being. So your actual taxable income is still $20,000. Mm-hmm. And this is where people get nailed at the end of the year, right? So, but the key to that wash sale rule situation is that the loss is still there. It's still hidden in the wash sale, but it doesn't play in until you've gotten out of that security for at least 30 days.
Sure.
So the minute you get out of it for 30 days, you're able to recoup that loss. What happens is people will keep that wash sale going because it keeps carrying over and over. They'll keep it over the end of the year. And so the loss will transfer over into the next year. So if you don't know, hey, in December, I got to get out of enough wash sales to reconcile my tax situation and not get back into those stocks for at least 30 days after I get out of them, that if you don't know that, you're going to lose all of those losses that you can take, and you're going to get taxed at a much higher rate. And I can't tell you how many people I've spoken to this year who experienced that, and they have a massive tax bill. Now that loss will be available next year because they just carried it over. But if they would have known that in advance and just did something so simple as getting out of enough of those wash sales to offset those profits, different world, right? So it's just like a strategy for buying and selling. What is your strategy in December to make sure that you can not send a huge check to the IRS?
What would your opinion be on, if you are trading through an LLC, avoiding the quarterly payments versus paying the quarterly payments?
That's kind of an individual strategy that you should probably work out with your CPA depending on your circumstances. We talked about the first path, which is trying to qualify as an individual for trader tax status. We didn't really talk about the second path, which is setting up your LLC and then running your deductions through that LLC.
Yeah.
The main thing that I would tell anybody is to make sure that you have that discussion with your CPA, because you don't want to be paying penalties at the end of the year thinking you avoided the quarterly income tax, and now the IRS is saying, no, we're tacking on penalties and 3% interest for the entire time that you weren't paying. But it's hard for me without looking at specific situations to say, absolutely try and avoid it. Here's how you do it, or don't do it.
Okay, cool. But that's good to know that there are some situations where you could try to avoid it. Okay.
Yeah. And the other thing I'll tell you, since we were talking about LLCs, is you can also have that mark-to-market election we talked about. And the cool thing about that is an LLC isn't under the same deadline to file for mark-to-market. Remember, we said mark-to-market has to be done by the prior tax year.
Yep.
If you form a trading LLC today, you have 75 days to file for your mark-to-market election for that corporation. So you could still spend half the year as an LLC, be able to take advantage of mark-to-market, so you avoid the wash sales, you get unlimited losses, and you can take all those deductions against your business. So not too late to take advantage of an LLC right now if you're a day trader.
Good to know. Yeah, I think that's super useful.
Yeah.
So when you're discussing like that, the mark to market and that aspect, it kind of makes me think like do you think that there's an ability in the future where brokers will have that application when you're filling it out so that it streamlines the whole process, or is that something that they'll probably do much farther down the road?
Part of the problem with that is the ambiguity in the law, right? So it's hard for them to say we're going to build all of these things into our software up front when there's not clarity in what specifically qualifies and what doesn't.
Got
And
it.
I'll give you another example.
Sure.
With mark to market. We still don't really know if mark to market applies to crypto. So it applies to securities. And is crypto a security? Is it a commodity? What is it? So the jury's still out on whether or not you can claim mark to market for crypto. The recommendation is try it. The worst that can happen is the IRS says no, but we don't know. So if you're a brokerage, how do you say, because when you build software, you want, are you A, B, C, or D, and select this, and then we'll move on to the next option. We don't have that in trader laws. So I'd like to see it. The other problem that I'll tell you about crypto that's very important is that your brokerage is not able to give you proper tax information because of how crypto is managed. It's really kind of in the weeds. But if you're trading crypto, you need to be tracking your purchases and your sales and your profit and loss. There's software out there that allows you to do that. You can do it on a spreadsheet, but you can't count on their documents for tax purposes. They're not set up that way, partly because crypto is so new, and some of the laws around crypto and taxes have just been put in place. So you need to be really proactive when you're trading crypto and track everything that you're doing.
Good to know.
Yeah.
Super useful. That is because like you said, it's still kind of the Wild West out there right now. And it's still so new that they're still formulating a lot of it. But don't you worry, they'll come up with an answer before too long.
They will, because they don't want to miss any of your dollars, right? I mean, that was some of the initial draw to crypto, is the government doesn't know what I'm doing and nobody else does, and that was really an appeal, right? But the IRS is not going to let that happen for very long, as you know.
Right. Totally agree with that statement. So Jay, when you are discussing with clients about the IRS, what is the scariest thing the IRS can do to an individual? Like if they don't pay their taxes for a year because they don't want to, what's going to happen?
Yeah, well, they'll start out with, they'll harass you endlessly, right? And then they will put a lien on your property. And the IRS is, if you owe money on a credit card, odds are the credit card company is going to write off that loss. They'll send you to collections, and that's it. You're not going to get sued, and that's the end of it. The IRS doesn't play that way. So they'll start off with liens. They will garnish your income, and they will not pay attention to your situation. Like if you say you can't garnish my income because look, I can't live on this, the IRS is not very sympathetic to your situation. If you owe them taxes, they have an expectation that you are going to do what you said in the very beginning, Jeremy, and that's where you said one of the first things I would think you would do is put money aside for taxes. They want you to be proactive and to know the laws in advance. If you didn't do that, that's on you, and they don't have any sympathy towards you about that. And so they can ruin your life. They can absolutely wreck your life. They will give you time. The IRS is more than willing to take payment options. So you can spread your debt out over the course of 6 years if you need to make payments. You can carry forward losses. There's a lot of tricks you can do. If you have mark to market, you can go back 2 years and include some of those losses for 2 years. So there's a lot of things you can do with a CPA who knows about these things, but I wouldn't mess with them. I mean, that's not a game I would play.
Yep. It's one of those situations where if you have to pay the taxes, probably should. Now, there was a article that came out, and I'm not entirely sure how true it is. I didn't totally research it, but essentially that some of the richest human beings in the world pay no federal income tax.
Mm-hmm.
Is it truly real estate holdings and they just end up writing everything off through depreciation, or is there some other super mega rich loophole that only they can go through?
Well, it's definitely loopholes though, right? They're basically using their losses and their depreciation to carry over. So the way the tax code is written, so like if you're a day trader and you don't qualify for trader tax status and you don't have an LLC, you can't write off unlimited losses. You have a $3,000 limit on your losses. If you are real estate, any other business entity or individual, you can write off these unlimited losses, right? And so if you have these massive losses, you think about Donald Trump and everybody's like, he hasn't paid income tax. Well, the man has experienced incredible real estate losses through the years. He's been up and down just like the real estate market. So the guy may have banked $1 billion in losses. I don't know what the number is, and he's carrying those forward every single year. So when the news came out that he hadn't paid income tax, I'm like, you can't look at that. You can't sit there and say, oh, he's not paying income tax. The other thing that people do is they will set up corporations. So the money comes into corporations and the money is there, but they're not accessing it. There's all kinds of loopholes that, other individuals can use. That's why you need a good CPA. But real estate is one of the primary ways to be able to do that for sure.
Love it, man.
Yeah.
Quick fun question.
Okay, I like the fun.
Ben Affleck, The Accountant, is it your favorite movie?
No. No.
Because that was 100% real. I think that was like a documentary.
Right. Oh, of course it was. It
was a documentary, bro.
No, the last thing you want to do when you're messing with numbers all day is watch people who live your life. It's like the guy who works in construction whose basement is never finished.
Yeah.
Because the last thing you want to do is come home and do more construction.
Yeah, that's funny, man. What is your favorite movie?
Yeah, I'm a sci-fi guy, sci-fi and action adventure. So, and my wife is too. So we love anything that is, anything like that.
Yeah.
I'm not a pick favorites kind of guy though.
Oh, that's fair. That's totally fair.
Yeah. What's
your thoughts and opinions on moving to different countries to avoid taxes?
Oh my goodness. I don't know if I can fairly answer that question.
Such a broad question.
I know. I mean, and some of that, when you think about certain types of trading, you're almost doing that. I mean, if you're trading Forex, you most likely have an offshore account somewhere. But the moment that you bring those funds into the US, you're taxed on them. So, I mean, we are aware of people who move somewhere else. If you think about it, if you have an income source that can be derived from anywhere that you live, then why not consider that? I mean, there's people, we do that within the United States. I know people who live in Texas, not because they love Texas, but because there's no state income tax, right? And the same with Nevada. So, but what they don't know is the property tax is much higher and it kind of evens out. But, so if it's a real benefit, if you can earn an income anywhere you live because you have an internet connection, that's when you can really start saying, well, my tax rate in Costa Rica would be nothing, and the dollar or whatever I'm earning goes so much further. I can see you making those calculations.
Yeah, I mean, because right now the new hot topic on the internet is Puerto Rico. Everyone's like, move to Puerto Rico.
Right. But isn't Puerto Rico under U.S. tax code?
Not yet.
Not yet. Okay, so we don't do anything with Puerto Rico, so I didn't know the answer to that question.
No,
you know
more
than me, Jeremy. Yeah.
Yeah, no, that's fair. Well, I just have a lot of buddies who are like, bro, you're probably making so much money on XYZ, like move to Puerto Rico so you don't have to pay taxes. I'm like, it's not that simple, homie.
No, it never is. And there's always a give and take, right?
Oh, for sure. Yeah, exactly. I mean, if you give up something, there's something else you have to pay for.
Absolutely.
Yeah. What's your opinion on if you are a W-2 employee and you want to create a trading company or any other company in general? Let's say you want to create a food preparation company, and that food preparation company, meal prep company, has one customer that brings in $30 of revenue a month, but you write off all of your food and drinks and everything that you spend in research for your food prep company?
Very
Are people
common
doing that?
practice. Oh yeah, very, very common practice for sure. There are people who recommend setting up an LLC, even if you're not doing other business, because you'll find a way to run business through that LLC. The key thing to remember is that an LLC is a pass-through entity. So any profit and loss that comes through that will transfer directly to your personal income, right? But you can take those deductions ahead of time. But you can also take those deductions if you're a sole proprietor, right? So
Sure.
if you're a sole proprietor, the IRS, unless it's day trading, the IRS will let you take all of those deductions as well. So I don't know that you necessarily have to have the LLC to do that.
Love this, man. I know it's like rapid fire questions right now.
No, it's
but
fine.
You're murdering it, dude. Murdering it. Opinions on creating an account for a child or a minor, same thing. You're an adult parent. You want to open up an account for your children, but you want them to start learning how to trade. So you actively trade. Do you open up in their name or under your name? How would you do that? Because they're not a legal adult yet.
Yes, a great question. I will tell you what we have a lot of people do is one of the things about setting up an LLC to trade is it can't be a single member LLC to be considered a qualifying day trading organization. So you have to have more than one person on that LLC. So a lot of people will put their spouse, but some people will put their children. And interestingly enough, there is no age requirement for a child to be in an LLC. So if they're a member of that LLC and you just set up another brokerage account under your LLC and they're the ones who are managing that account, as far as the brokerage, the IRS, everybody else is concerned, it's just your company that's doing that. They don't know which employees are actually initiating the trades or not. So I would do that under an LLC. And the other benefit of an LLC, there's a couple. You get asset protection, right, from lawsuits and those types of things. But also estate planning is a huge reason to have an LLC. So people will put their children into an LLC because they can transfer wealth through the LLC to the children without many of the tax ramifications. So that's the route that I would go. And I will tell you, we have teenagers who are day trading through LLCs, and it's a great way to pass that trade on to your children.
That's so cool, man. What a gift that you're giving them, learning how to do this early.
Yeah, absolutely.
That's so wonderful. And this has been a real honor to be able to speak with you today, because I just think that there's so many people have these questions, and I got one or two random broader ones as well. Other than kind of the obvious, was there another reason why they pushed back the tax date to May, and will it stay that way?
No, I think it was the obvious, the pandemic. Everything I've seen says that it's going to go back to April 15th. In Texas, they extended it even another month because of all the floods. Wow. Yeah. So Texas, they got an extra month above everybody else. So I think I wouldn't try and read into it too much. I think you should plan on April 15th every single year, and actually hope that we don't have situations that extend it, because that means we're probably all going through something that we can't file our taxes in time. So that's not something I would hope for in any circumstance.
Understand. And the company Intuit, are they as strong as they look, in your opinion?
Oh, wow. You really hitting me with some questions. I wouldn't know how to answer that. It wouldn't be fair for me to answer.
Bro, this thing is like a train. I mean, yeah. It was $70 a share in 2015, $470 a share right now.
Wow.
I mean, incredible, right?
Yeah, absolutely.
Wow. I mean, how are they making their money, in your opinion, other than the obvious? Is there anything specific that you know of?
No, I honestly, I have not taken a strong look at Intuit, so I couldn't answer that question.
Yeah, that's fair. But yeah, it's just so interesting. Like, all the companies that are out there, I mean, that one it's a sleeper, dude. It is a sleeper. They're probably gonna have a split soon. Are
you in? Did you get in?
No,
you did not.
I did not, because I'm an idiot, apparently. I hate money. That's the most obvious answer. Man, yeah, that one, and like Adobe. Adobe's been performing really well. I know they have a lot of taxing software and, QuickBooks and so many other Photoshops. I think a lot of people during the pandemic, they're picking up that side skill, right? It's like a side hustle kind of thing where they have their job and they're doing Photoshop and video editing, using a lot of Adobe products. And, again, that reoccurring revenue model, it's a strong model.
Yeah, and I do know a little bit about Adobe, how they operate. During the pandemic, everybody went to work in the cloud, and they started using what's called SaaS applications, software as a service, and Adobe's really been leading out on that. So it used to be that in order to have an Adobe product, like if you wanted Photoshop, you'd have to go to a business and install using a CD that software on every single machine. Nowadays, you can pay a subscription and the people can do everything either online or download online from home. And so the pandemic really played that up. So I think you look at any company that uses SaaS, they probably saw a huge benefit from the pandemic. And I think that's going to carry forward because companies learned that they can have work from home. And I'm sure you've seen in the news, a lot of employees are saying, if you try and make us come back to the office, we're not coming. We're going to find
a lot. It's happening a lot right now.
Yeah. And it's just amazing to see how the pandemic has changed how employees will function within a company. I think it's changed society in so many ways. We learned so much about how we can operate, in different ways.
100%, man.
Yeah.
100%. Jay McFarland, ladies and gentlemen, from Trader Tax Pros. Dude, you are a pro. This was awesome. Your answering of these questions were truly remarkable, and it makes me feel good that we have people out there who care as much as you do about the financial stability of other individuals out there in the world. So, man, thank you for your time today.
Well, I'm so glad, and I'm just really glad that you're taking the time to spread this message. If people know about it in advance, they can prepare for it, and they can actually maximize their income and minimize their tax burden. When they find out after the fact and they've been relying on people for advice and those people never bring it up and never mention it, it's almost a crime, because you teach people how to make money on one end, but then you don't warn them that the money that they made could be gone on the other end if they don't do proper tax preparation. The two go hand in hand. So I'm really glad you're focusing on it.
Oh, dude, my pleasure. I saw a quote today where it said a lot of people know how to save money, but very few people know how to spend it. So in the sense of spending it on the knowledge and or proper CPAs, because 99% of the world doesn't have that skill. So pay someone that has that skill, use that money so that you can spend it wisely. If you spend it wisely, you can save it wisely.
Yeah, and I think if you look at most studies, you'll find that the money you spend on a CPA, you get it back two or three times above what you spent.
Just the mental stress alone.
Yeah. And what you spend on a CPA is tax deductible if you have trader tax status or you're an LLC, right?
Boom. And you help people set that up?
Oh, yeah. So we do two things. We set up qualifying corporations, and we do business and personal taxes for day traders. That's all we do.
My man. Awesome, brother. Dude, thank you so much for your time. Have a wonderful rest of your week, and look forward to working with you again, my friend.
Yeah, you too. It's been a real pleasure.
Likewise. See you, Jay.
Thank you.